Hey everyone, welcome back to Corporate Decoder, the place where we, after carefully reading a gigantic report, tell you everything that matters so you don't have to. And this time things are getting a little steamy because we're diving into Rackspace Technology's latest proxy statement. This isn't exactly a thriller novel, but trust me, there are enough juicy bits to make it worth our time. We're talking about who's running the show, how they're getting paid, and what it all means for you, the shareholder. So buckle up, because we're about to decode some corporate secrets. First things first, this document is here because you own stock in Rackspace and it's time for their annual meeting. It will happen virtually this year, so no need to get dressed up. This document will tell you how to vote your shares. The main things up for a vote are electing directors and ratifying the company's choice of KPMG as their accounting firm. There's also a non-binding vote to approve how much the top executives are getting paid. Keep in mind that certain large stockholders, especially Apollo, have a lot of power here. They own a huge chunk of the company's stock, so they have a big say in pretty much everything. Rackspace is using something called notice and access rules, meaning they're mostly putting this stuff online. It is cheaper for the company. If you prefer a paper copy, you can request one. And yes, you can vote confidentially. It's your right as a shareholder. Let's move on to the people who are in charge. We have a list of the directors, their ages, how long they've been on the board, and what class they belong to. The board is divided into 3 classes with staggered 3-year terms. Apollo gets to nominate a percentage of the directors based on how much stock they own. Interestingly, Rackspace is considered a controlled company. Because Apollo controls most of the voting power, that means they don't have to follow all the rules about having an independent board. However, the board has determined that several directors, including Miss Atkins and Mrs. Benjamin, Garber, Gross, Roberts and Scott, are independent. The board has 4 committees, one of which is the Compensation Committee. The Compensation Committee decides how much the top executives get paid, but because Rackspace is a controlled company, it is not required for Compensation Committee to be comprised entirely of independent directors. Now let's talk numbers. What did Rackspace pay its auditors? In fiscal year 2023, audit fees were about $6.7 million. Most of that is for auditing the financial statements. There are also some fees for tax services and other things. There was also almost $800,000 in audit-related fees for services that are related to the audit. This might include some checks to make sure that if they bought a company, that its accounting follows their rules. Here's something important. The audit committee, the folks in charge of making sure the books are clean, have appointed KPMG as the new independent registered public accounting firm. The old firm was PricewaterhouseCoopers PwC, but that's changing. You as a shareholder get to vote on whether you agree with this choice. The report states that there were no disagreements with PwC during the years that they were the auditor. Typically, when a company changes auditors, there are discussions with both the old and new auditors to make sure there aren't any red flags related to accounting principles or practices, financial statement disclosure, or auditing scope or procedure. The company confirmed this was the case and PwC agreed. Let's talk about the team at the top. There are the executive officers of the company who lead the ship. Amar Maletira is the Chief Executive Officer and Mark Marino is the Executive Vice President and Chief Financial Officer. Now for the part everyone's been waiting for, how much are the executives getting paid? First, let's check the base salaries of the team. Mr. Maletira, the CEO, gets a $900,000 salary. Mark Marino, the CFO, gets $530,000. A significant portion of the total compensation depends on how well the company does. It depends on how well the company performed against goals such as revenue and operating profit. Then at the end, the compensation committee can decide to give them extra bonuses or reduce the total amount depending on each person's job. Because Rackspace did not hit its predetermined goals in 2024, the compensation committee did what's called exercising discretion. They decided to increase the payouts because of the incremental effort associated with certain corporate events, such as debt refinancing transactions. Because of this discretion, the bonus payout for the CEO, Mr. Maletira, was $1.35 million. The new CFO, Mr. Marino, got about $550,000. There's also a long-term incentive program. This rewards the executives with equity or cash if the company does well over time, typically 3 years. The goal is to get them to think about the long term and to make sure that their incentives are aligned with the interests of investors. In fiscal 2024, the Compensation Committee granted the leadership team RSUs, that is, restricted stock units that vest over time, and cash bonuses based on our stock price performance over 1, 2, and 3 year time periods. These are called PSASH awards. They wanted to find a good mix between handing out shares and limiting the amount of dilution while still motivating the team. Remember, Mr. Marino was just promoted, so he received a one-time set of awards related to this promotion. If you want to see all these numbers, you can jump to the summary compensation table. It lays out all the different parts of the pay package for the top executives. It lays out all the different parts of the pay package for each named executive officers. So, for example, Amar Natira, the CEO, got $900,000 for salary, but his stock awards were worth $6.1 million for a total of $8.4 million. Of course, he won't actually get all the money now because most of it is in the form of stock or equity that vests over time. Now, what happens if the company messes up and has to restate its financial results? Well, there's a clawback policy in place. That means the company can take back some of the incentive pay from the executives if they were wrongly rewarded because of bad numbers. If you are into the weeds and are interested in seeing more details about the shares, warrants, and rights, you can scroll to it and take a look. Another important thing to pay attention to is the CEO pay ratio. This shows how much more the CEO is making compared to the average employee. In 2024, the median employee at Rackspace made about $55,000. Mr. Malatira, the CEO, made about $8.4 million. That means the CEO was paid 154 times more than the median employee. It's worth noting the median employee's pay is only calculated to get the ratio and is not necessarily reflective of the general wage of the company. Here's how the compensation changed over the last few years as well. The company has provided a pay versus performance table showing total compensation and performance. It is basically a summary of what we just talked about. For Amar Malatira, the second peer listed, the summary compensation table total was $8.4 million compared to actual payment received of $7.6 million. Then the net income was negative $8,500 million compared to actual payment received of $7.6 million. Then the net income was negative $85.8 million and the non-GAAP operating profit was $5 million. So that's the story of the proxy statement, from who's on the board to how much the executives are getting paid. It's a peek behind the curtain of how Rackspace is run. Now, let's step back and look at the big picture. Rackspace is in a competitive market and it's making a lot of changes as it is trying to grow. The numbers suggest that while the people in charge believe in the long term, it still hasn't reflected in the share price. A key thing that I noticed is the relationship with Apollo. They have major influence on the future direction of the company. Also, it is probably a good thing they brought in KPMG. So what's the takeaway from this? Well, Rackspace is in the middle of the transition and it will take some time before all these changes turn into results. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment with your thoughts and subscribe for more corporate deep dives.